Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, it's Anthony here. I just want to run through yesterday's trade signals. We had 5, and I'll just give you some ideas on how you might want to manage these. Okay, so we're probably going to look at 4 to 5 trade signals a night. All right, so we've got these 5 signals here. Entry price, stop loss, targets. What I want to do is just go through this stop loss thing, because sometimes, depending on how the trade's running, I might close the stop loss up a little bit, and I'll even take profits a little bit early sometimes. Mainly because in the beginning I do give it a fair bit of room to breathe. You could look to make some adjustments. Here's how we can do that. So I've highlighted these 5 pairs here we traded yesterday, green highlight. So we'll just quickly go through these. So the first one is the dollar Swissy. Okay, so what I want to cover in this video really is how we can manage these trades around session times. We start at the London Open generally with our opening our positions. But as we move into the Asia close and the New York Open, we can look to take partial profits around these times. Let's say we're heading into the Asia close and things have been running in our favor during the London Open. We know that the Asia close is going to most likely give us a pullback in a lot of cases, not always, but in a lot of cases. Okay, you could, if you wanted to, you could close at, or you could close 2/3 of your position wherever it's trading at that point. Pull your stop loss down so that you're in the money and risk-free. There's nothing wrong with that. So let's just have a look. We've got the London Open. We entered our trade here. We come into the Asia close around 1900. Let's go down to a 30-minute chart, or 15. This is our London Open here. Okay, we come into Asia close. It's around 19. Continues down, and then we come into the New York Open at our 22. Okay, we enter our trade here. We get a good run down, okay, into a support zone just before the New York session opens. Heading into New York, prior to this time here, there's no harm in closing a portion of your position, because we know that there's going to be a reaction generally around, well, the London Open, the Asia close. Sometimes we see quite a strong reversal, and then New York's going to give us that as well. So there's nothing wrong with taking partials as we trade into the New York Open, and then you can see the pullback happened here. Then we pull our stop loss down. We call that T1. We pull our stop loss down, and we've taken 2/3 of our position off at that level. All you need to do then is make sure that whatever you've closed here is well and truly in the money in comparison to the risk that's remaining on the trade. And then you know that this is risk-free and you can leave it alone and see what we get out of it. Hope that makes sense. And let's just have a look at these trades. Aussie dollar, that one I think wasn't so favorable. But I mean, this is a way that we can keep on top of the trades here. Okay, so we had the London Open here. So we trade then into 1900 my time is the Asia close. So see what happens here? Okay, we get this rotation at Asia. Okay, when you see that, I mean, you go down to a lower time frame, and when you see the shift happening here, so this is the Asia close. Okay, we trade down. Okay, so you want to be looking at these times. Okay, London Open, Asia close, and then we've got my 2200 is the New York Open. Right, so you'll be watching this. This is a 5-minute chart between London and the Asia close. There's not a lot of time. Okay, we get a double bottom down here. I mean, that's telling us that we definitely could consider closing, taking partial profits here. Nothing wrong with that at all. As it was, this turned around and kind of traded against, and that would have been an okay call. So just keep an eye on these session times. Bitcoin, I think, was quite a nice outcome. Just make sure that you leave a third in to run, because you want the benefit of when the market does trade in our favor. So here we are. Again, mark up London Open. It's the Asia close. And then we trade into the New York Open, my 2200. Well, that's well and truly in our favor. Okay, London, Asia, we've gone negative, so we leave it alone. And then as we're approaching New York, that can be where you take your partials right here and then pull your stop loss up. Absolutely nothing wrong with that at all, because we don't know if that's going to turn around at New York and trade south. So you're taking money out, you've pulled your stop loss up to wherever it's well and truly, in the money. It's a profitable trade and risk-free, and you leave your 30% in and let it run. Let's just have a look at these ones. What have we got here? We've got US 500. I think it's definitely worthwhile closing partials around these times like the Asian close. Okay, so here we go again. Opened at London Open, but we've got our 1900 here. Okay, it's gone negative, so just leave it alone. There's our Asia close. New York Open, 2200. So at the New York Open, we're still running negative in this one, so we just leave it alone. And then it comes good, and we get quite a nice outcome. Once we're well and truly clear of our entry point here, you can call the shots. See, once we're running and we've had this rotation, pull your stop loss down to under the previous low here and then set up a target. If this is what's happening here, it's heading north and you didn't get a chance to close partials around these times. Okay, so now we've traded away. You can use this tool here, pull your stop loss down and go for T1 up here, 1-to-1 risk reward. So that's where you'll look to close partials around this zone here. Once that's done, tighten up your stop even further and trail the rest. What do we got? Dollar CAD. So, we do this, we just keep taking money out of the market consistently. Okay, so here's a good example of why we do this. Okay, London Open, we enter. So we've got the Asia close at 19. New York at 22. What's going on here? So we entered. We had a little bit of a move. Went negative. Came good. Okay, so we didn't get much of a chance around these levels. Got a bit of a spike after New York. How well do you read it? That's the question. And then it trades up. Looks like it's going to continue on. And of course, it turned around. So, you may or may not have caught that. Some of the telltale signs. You see these lines. These are divergent signals, and we're getting them bearish. So this is telling us that the momentum is actually starting to shift. How well do you read it? That's the question. And the other thing is too, after New York, you generally want to see the trend settle in. Okay, it rotated here, went north, and we got a red dot. Okay, so what we've got here now is strong move south, and we're not seeing any continuation. Okay, so this is the pattern that we talk about in a lot of the videos where there's the range. We get the fake out, the shakeout here, and then see this low. This is what you want to keep an eye out for, and this is giving you a bit of a clue, especially when you see this drop off like this. So depending on how well you read price action, that's going to tell me, or at least even this is going to tell me to consider bailing on this trade. You've got a lower high, lower low. See, once you break the trend and you get that, that's not a bad decision to exit. And that's your risk. It's seriously minimal. Okay, if you go down into smart money, study the videos and the screenshots I've got in there in smart money, because we go into this price action in detail, especially where you see the range, you see the volatility, the breakout, and then you get the trend setting up south like this, lower high, lower low. That's definitely telling us to bail, and so we minimize our loss. Just have to understand how to read price action. Okay, and then dollar Swissy. So all in all, last night we might have had one, if we managed this well, we would have had one minimal loss and the rest of them were profitable. With some of these, well and truly. There's the rotation here at the New York Open that we're looking for. Trades back up, does another tap into liquidity. But by then, we've closed a good portion of our position here, 2/3 of it, in the money, and and this is running risk-free. Right, so, because the bottom line is just keep an eye on how we trade into the Asia close, the New York Open, and watch price action. Yeah, it's definitely okay to take your money and run, but you want to be careful because there's a fine line between managing it well and getting emotionally involved and messing up your trades. Okay, so it's just a matter of time in front of the charts, practice, and keeping an eye on how price is reacting around the Asia and the New York session times here, or Asia close and New York open. So generally we're going to have anywhere from 3 to 5 trades. I'd say we'll average out at 4 trades a day. Manage them well and grow your account. We'll get a pretty good win rate out of these. Now you'll notice I haven't been doing many videos lately. I'm having a bit of a shift in how I'm doing all this. I need to focus on my own trading. Okay, I've got prop firm accounts that I'm responsible for, and I really got to focus on those, trade well, and get that right. So I'm going to give you the trades that I take every day. So there were 5 yesterday. These are the trades I'm taking on my live accounts. If you want my signals and you want to join me on this journey, and you haven't already, you can join. Just go over to my website, tradingwithanthony.com, and the link is in there for you to jump on board. The discounted price that I'd had previously, that's over. I don't want to give this away for peanuts anymore. I did that for too long. So if you see value in what's going on here, you're welcome to join. The current rate is clearly on my website. Okay, so you can have a look at that. All right, guys. So with that, hope you have a great day. Safe trading, and we'll see you in the next video.